Hi guys, if you save and invest money, money will save you. Guys, welcome to your channel, and in today's video we will talk about what is savings, what is investment, what is the difference between saving and investment, because many times I have seen that people use these phrases interchangeably. They think saving and investing is the same. So we will explore the differences. We will explore the traditional saving tools, investing tools, some examples. Okay, so let's get started. Okay, so saving. What is saving? Let's suppose you make 10,000 rupees and your monthly expenditure is, let's say, 6,000. So you are left with 4,000. So that 4,000 is nothing but your savings. Congratulations. Very simple example. We have been doing it for ages. You get your salary, you make your spending, and what is left you save. Great. So that is about saving. What is investing? From the saving part, you have 10,000, you have spent 6,000, 4,000 you're saving. From 4,000, what you can do? You can take some money and invest. Okay? So what exactly is saving then? Don't be confused. Okay? What is saving? Saving is basically a very short term. It's a short term thing. For example, you need to buy a car, you need to collect a down payment for something. So you will save some money on every monthly basis into your saving account, or let's say a fixed deposit account, or a recurring deposit account, so that for a short term you have some amount available to meet your expenditure. Maybe you have to go for a travel, or maybe you have to buy something, some jewelry, or some down payment for a car. So every month you are saving some amount in a saving account, which is very low risk. So understand, saving is a low risk, because if you are putting something in your saving account or FD, it is very low risk. There is no risk involved. So saving is basically for a very short period of time. It is very low risk. You can very easily take out the money. There will be no difference to your principal. What is principal? If I'm saving 10,000 rupees, 10,000 rupees is my principal. My principal is always safe when I'm saving, because I have a short term requirement. Okay, so saving is what? Short term. It is very low risk, and pretty much the investment, pretty much the saving is liquid. Liquid means I can withdraw it very soon. Example of saving, I've just talked about saving account. You have fixed deposit account, you have a recurring deposit. Some people save in their piggy bank at home. Saving is a habit which we have since our childhood, right? We have our piggy banks, 3 4 piggy banks. One piggy bank is for me to buy my dress, one for my games. So similarly, people have different bank accounts, all saving accounts. So they keep saving their money as and when they make from their business or salary or profession into these saving accounts for short term requirement, where they want the money to come to them as soon as they want. Click of a button these days. Okay, so we have discussed saving. Now let's talk about investing. Great. What is investing? Investing, you can say it's a big brother of saving. The benefit of investing is that it is slightly it gives you more return, but it has higher risk as well. So the basic difference between saving and investment is the risk. RISK. Investing is done for a long term, let's say 5 years, let's say 10 years. I have 10,000, I do not need this for next 10 years. I have two options. Either I put it in my saving account and earn 3% in a 3% in a year, or I put that 10,000 maybe in a mutual fund, which will give me 10 to 12%. That is an investment. So now I hope the difference is clear. Investment has a higher risk, and it is for a long term. Higher risk, long term. Liquidity is slightly lower. What is liquidity? If you want to pull back the money, There might be some conditions, but these days mutual funds are very flexible. You can pull the money back from mutual funds. Mutual fund is only one example of investment. Okay, so is it getting clearer now? Long-term investment is say investment. It has higher risk because some of your money is invested in the market, in the equities, or maybe in the debt portfolio. Liquidity is low. Why do people invest? So why do people invest? Because in the long term we have seen investment products, let's say gold, mutual funds, stocks, real estate. Yeah, real estate, they have given return more than 10%. So to beat the inflation, if the inflation is right now, let's say 7%, fixed deposit will give you 5, investment products will give you double, 10%. That's why we do investing. In the long term, your money will multiply more. We have heard the rule of 72. A fixed deposit will double your money in 12 years, but a mutual fund will double the money in 6 years. That's why we do investing. So I hope the difference is getting much clearer now. Investing, saving. Okay, why will you invest? Long-term demands, long-term requirements. Let's say I am 30, I have to retire at 60. I have 30 years. Putting your money in a saving account or a FD for 30 years doesn't make sense. So for long-term planning, retirement, children education. I know I have to send my daughter to a higher education, maybe to a big college. I need money, 20 lakhs maybe, if she wants to do something significant. So 20 lakhs, I have 15 years. So putting for 15 years, it is not recommended to save money in an FD. Maybe go for a debt mutual fund or an equity or hybrid kind of a mutual fund, which will give you 10 plus return. Difference is now clear. Saving is for a short term. Investing is for a long term. Investing will help us to beat inflation. We have seen prices double every 20 years. Saving products will not be able to beat inflation. Investing products, they might be volatile, but in the long run, they will and they are beating inflation. Okay, guys? So, in your portfolio, you should have both saving products for your short term needs and investing products for your long term needs, and that is your intelligence. Everything should not be investing and everything should not be saving. If you want some money in 2 years, use the saving products, fixed deposits, savings, recurring deposits. If you want money after 5 years, 7 years, 10 years, investing tools. Best investment tools are mutual funds, your gold, real estate, long term. Okay, guys, with these, as always, I leave you with your saving and investment thoughts. You take very good care of yourself. I will see you in my next video. You keep saving, you keep investing, you stay happy always. You have my best wishes, you have my thumbs up. Victory for you.